What's up, you guys? Zoe here from oneglancetrader.com, and in this video I'll be walking you guys through some of my top holdings in my growth portfolio, and I warn you now, it looks pretty ugly. Most of these stocks are down 50-60%, but that's not what I want to talk about today. What I want to focus on is how you can still make income or mitigate your risk or your drawdown by utilizing covered calls. And if you own 100 shares of a stock, more than likely you'll be able to follow this exact strategy that I'm outlining in this video. So if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe and comment down below on how much gain or loss your current portfolio is. So we'll be going through some of these stocks, and again, I'm not going to go into the reasons why I'm in these stocks, what these stocks kind of do. I'm more interested in telling you guys how I'm making income or generating money while holding these stocks that are currently down. So the first one is Riot Blockchain. If you guys watch my channel, you guys know I love Riot Blockchain as a stock. Very high volatility in terms of trading options and trading covered calls. So as you can see, I am down 58% on this particular stock, right? I've not added my break-even price here of all the income I've made while holding this. I just wanted to kind of show you guys, look, this is the raw facts of where we currently are today. So I have a cost basis of 25.88, where the current price is 10.84. I own 800 shares of Riot, which translates into 8 contracts in options terms, because to trade options you need at least 100 shares of a stock, which then translates into 8 contracts. So even though I'm down 58%, what I'm doing is using an options trading strategy called covered calls. And covered calls effectively means that I'm willing to sell my 800 shares of Riot at a strike price of my choosing at an expiration date of my choosing. So what I've been doing is I've been roughly getting around $11 for selling covered calls per contract, for selling covered calls on Riot. And I own 8 contracts of Riot, and therefore I'm making, or I'm receiving, $88 in covered call income. Now, to be clear, I am selling covered calls below my cost basis, because if I was to sell covered calls, so I'm willing to sell my shares at the $26 strike, because that's the closest round number that there is, then I probably wouldn't. I'll probably be making like $2 per contract. So I am selling covered calls at around the 13 to 16 range, because it has been around, that around levels where on average I'm making $11 per contract. Yes, there is a risk that I could get assigned early. However, that's a risk I'm willing to take because I really believe that no one would assign a covered call option early when the current price is below the strike price. So let's say I have a strike price of $14 and I made $11 per contract. Why would I get exercised early when someone can just buy 800 shares at 10.84? It just doesn't make any logical sense. So that's, as long as I don't go in the money, I'm fairly comfortable. And what I try to do is pick a strike price that is, when I'm doing weeklies, about 10 to 20% away based on where the kind of market is. I could go closer and I could get, $40-50 per contract, but then I would have to go at 11.50, which, if you guys know Riot can go up 5-6% in a day. So I'm being very conservative, going 10 to 20% above the current price, selling these covered calls. So then if you times it by 4, it works out to be $352. So hopefully that kind of makes sense in terms of where my strike prices are. And these are the same with all of these stocks. You will notice that my next one, Hut Mining 8, which is also a Bitcoin mining company, is down 61% from my cost basis of $9.44. And I own 1,600 shares or 16 contracts. And again, because the value of HUT is a lot lower than Riot, so for me to sell the $5 or $5.50 strike, which is what I've been basically doing, I've been making about $2.60 to $3 per contract. So again, because I own 16 contracts or 1,600 shares, that's $48, which translates into $192 a month. The third one is Palantir Technologies, data analytics company. Again, I am down 50% on this particular stock. This is a less volatile stock than Riot and HUT, so the premiums are a lot lower, unfortunately. But we have a cost basis of 21.25 and the current price of 10.55. I own 800 shares or 8 contracts. And again, going around 10-15% above, the current price on a weekly, I can average around, $5 to $6 of 8 contracts, which is $40. If I do that every single week, I make around $160 a month. And these are ranges, right? Depending on what happens to the stock in various things, it might be $13 or $9. There's more of a range, but this is kind of like the mid average roughly over the past couple of months of what I've been kind of getting to give myself some time. So I'm buffering in some upside. So Palantir, they release earnings next week. They go up by 10-15%. I'm still kind of in a good place, but I hope to get out of this. I've got one at $5 ending next Friday, and I think they release earnings next Thursday from memory. So I'm looking to get out of this trade before earnings because anything can kind of happen with these kind of stocks in this current market conditions. And the last one, which is probably the biggest holding I've got, is ChargePoint. Again, I've done some dedicated videos on ChargePoint. I'm down 50% on this particular stock. Cost basis of 27.17, current price of 13.48. So I'm making about $7 on this particular on this one per contract on average, and because I've got a lot of volume, I'm making $189 and around $756 per month. So we add that all together, it's about just under $400 weekly, which translates into just under $1,500 a month, which is still pretty good income. And when you work it out from a investment perspective, so across these 4 holdings, if you look at it, I have $126,000 invested into these 4 companies, which on average, if you work it out, is down just a little over kind of 50%, right? However, like I said, these are more ranges, but if we take the 1460, if I can do this consistently every single month, it works out around 17.5 grand a year, which then works out as an ROI of my initial capital of 126 of 14%. Right? So as long as I'm not selling my stocks, and again, these market conditions, for those who are in this market, yes, growth stocks are getting hit a lot more than kind of more profitable companies and more stable stocks, but everything has been hit. So in normal market conditions, to a certain extent, not hyper growth and not where we are today, we're at 2 different extremes, where we were in 2021 to where we are year to date in 22. I'm probably down about 10 to 20%, probably is more like it really than where we are there. And then that's more of a manageable portfolio. This is really at some extreme at the moment, and I personally do think that there is more kind of pain to come. So as I said, if you own 100 shares of a stock, whether it's Apple, it's AMD, it's Amazon, Google, it doesn't really make a difference. So as long as you can trade options on it and you have a broker, I use Interactive Brokers. Link is down below to go check those guys out. If you're looking for a broker that allows you to trade options, and what you can do here is sell those options, hopefully at or above your cost basis. Again, I don't recommend people to sell options below their cost basis. It's something that, it's a risk I'm taking, but I'm managing that risk to at least then start generating income or mitigate some of your risk. So the key question is what am I doing with this $1,460 that I'm bringing in into my portfolio? So as you can see, fortunately, unfortunately, all of these stocks are down. If I times these by 100, they're all below the amount I make on a monthly basis. So I can then start selling puts utilizing this income on one of these stocks. So let's take HUT for example. I could start selling the $3 strike, right? For 3 contracts for $900. I can probably get 4 contracts for $900. And what that's going to do is, if I get assigned, right, it will lower down my cost basis, right, and then I can sell more uh, income to get some more covered calls. If I don't get assigned, I keep the premium I collected from selling those puts, which then will go into lowering my break even, which you can't see on here, of all the premiums I've collected across each one of these stocks. And then I can do that again, which is all adding. So this 1460 is only the money I've generated from covered calls. So I am selling puts as well on some of these stocks as well to lower my cost basis with cash I've got available and cash I've generated from premiums. So this number is I won't say a lot higher. It's probably touching around $2,000 a month. But what I'm doing is I'm not withdrawing it and paying my mortgage and all of this stuff. I'm reinvesting back into these stocks because I still believe in these stocks for the long term. We are just in some market conditions here where any stock you really look at is pretty much down year to date. So growth stocks have been hit a lot harder than like I said, larger caps and more profitable companies, like I said. But this is what I'm doing. So I'm recycling the cash to then go and sell another put. So if I sell another put on HUT, for example, at the $10 strike, right? If I go a month out, I can probably make about 8% return. So I can probably get about $80 for the $10 strike. If, like I said, if I get assigned, either way, I keep the $80, right? Which then I can utilize again with everything else as part of the next month selling puts. If I get assigned, great. I now have 9 contracts to be able to sell covered calls against and also lower my cost basis down and lower my break even. So these are the things that I'm doing here. So these are scary. These are big numbers. 126 grand. I'm down 50-60%. But I'm staying true to my process of we just need to ride this position out. I'm still generating money. If I wasn't generating the income, then I would be a little bit worried. But the fact I know I'm still making 1,000 a month, 1,000 a month, money is coming in the door every single month, utilizing this strategy. And eventually, when the market recovers or starts evening itself out, I can then sell covered calls closer to the current price when I get closer to my cost basis to generate more. Because let's say I was making, and again, I'm just going to make this up, right? Even if it is, let's say I could get $20, right? $20 at 27 contracts. So what's that? $10 would be 270, 400. That's $540 a week, right? Just on ChargePoint when it recovers, right? Hopefully that's sooner rather than later. And I believe in these stocks that these will recover. These two are related to Bitcoin. I'm a long-term believer. I'm cost averaging into Bitcoin and Ethereum. Comfortable with that. I've got PALTR. Again, probably not. I don't mind the holding the stock really at 21 because I do think it'll be profitable in the next couple of years. But that money could be utilized better in other stocks, to be honest. And similar to ChargePoint, I didn't expect to get 2,700 shares. I've done a video, which again I'll link to inside the description and in the top right corner, on what to do or how to not get in this scenario of where you're down 50-60% through my methodology of a portfolio. So if you want to do this and sell covered calls on stocks less volatile, hit that link. I think the end screen, that's the word I was looking for, is on the screen now to go check that video out. And I really hope you've enjoyed this. Hope you've learned something. Comment down below, and I'll see you guys in the next video.